Hi, and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are about my journey towards financial freedom, financial well-being, financial products so you, like me, can reach your goals sometime in the future. Now let's get into the video. Now it's to give people hope. If I can build up a sizable portfolio over 6 figures, you can too. If you create a plan, action plan, invest on a regular basis within a tax-free investment wrapper. So this video is about my stock and shares ISA for the review of January 2025. Now it's not to boast or brag, but to prove if I can do it, you can do it. So what are the aims of the portfolio? Well, we're looking for annual yielding returns of 10%. For 2025, we're looking for dividends of £5,000 and a year-end fund value of 153,000. So how have we done in the month? Well, we started at 122,998. We finished at 129,643. So profit of the month of £6,645. Year to date January is 5.37%. So a very good start during 2025. Now we put monthly contribution of £250 in. So tax year to date we put £3,900, and our platform provider charges fees. Currently £15.81 as percentage of our pot value. So a very nice start during the year. If you look at the following graphic, where exactly is the portfolio held? Well, we're reducing our exposure to UK, but at the moment we've got 57.79% UK and Europe, 30% in Americas, and 11.54% in Asia and emerging markets. Now during the month we received no dividends, but we're looking for, shall we say, annual or monthly dividends of £420 a month, so nearly £5,000 a year. And across our shares, we've got an average yield of 5.79%. But we will have good months, we'll have some very, shall we say, bad months. This month we've not received dividends. So let's have a look at where the holdings are in the portfolio. Now they're my own personal selections. They're all what we call long-term holds. We don't buy and sell shares, we hold them for a specific reason. We've got no reason I'm going to sell any shares in the foreseeable future. At the moment we own 10 shares, 9 in profit, 1 in loss. 46% of the portfolio, of which 40% is in the FTSE 100 and 6% in the FTSE 250. And our holdings across the shares is currently £59,438. So let's look at the graphic about what our holdings are invested in. Based in financial services, what we know about, but good quality companies, being there for many years, will be still being many years. We just switch off. Our largest holding is Lloyds the Banking Group, 20,163 shares, 12.5 grand, nearly 10% of our portfolio. Very cash rich, pays a yield around 5%, and hopefully end of February we'll have very good results. But who knows what will happen, shall we say, with the impending car leasing or finance scandal. But a very nice dividend will pay us £1,000 at least in May later this year. We own Legal & General, 4,749 shares, £11,500, 9% of our portfolio. Again, everyone needs insurance, cash rich, for a yield of around about 9%. We also own Aviva, 1,898 shares, nearly £10,000, 7.5% of our portfolio. Hopefully good results or trading today become soon. It has been on, shall we say, a streamlining in the past few weeks, past few months. But again, just like L&G, a yield of around about 8-9%. Now we own Barclays, 1,651 shares, nearly £5,000, nearly 4% of our portfolio, but just like Lloyds, very good, shall we say, results hopefully due in February. Dividends will be increased. Who knows what happens, shall we say, bank margins, but it has turned around and the banking sector has done very, very well during 2024. Now away from the UK banks, we own HSBC, 535 shares, 4.5 grand, 3.5% of our firm, shall we say, overseas exposure, but it's for, but it does pay a nice quarterly dividends. Now back onto the UK banks, we own NatWest, 1,008 shares, £4,500, 3.4% of volume. One of the best performing shares in 2024. It was up nearly 90%. At the moment, the government's been reducing its stakes down to about less than 9%, and hopefully that will be, shall we say, fully diluted during the early years this year, and the shackles are off. But just go to show it's been a great recovery, and it does pay a very nice dividend. So let's see what the results will be like during the end of February. Now away from the banks, we own Card Factory, 3,960 shares, a very good trading statements over Christmas in January, cash rich, dividends being increased, being reinstated, is, shall we say, expand the high street, but it has struggled with online business. But it's £4,000, 3% of the portfolio. But who knows what will happen, shall we say, with the minimum wage increase and the NI increase. Now we own AJ Bell, the platform provider, 731 shares. It will pay a dividend, shall we say, in start of February, but it's what we call a growth company. £3,500, 2.5% of our portfolio. We own Phoenix Group, the pension provider. It has been on the consolidation state lately, been buying companies. 466 shares, £2,500, 2% of our portfolio, but a yield of around about 9-10%. It's what we know about, and it's what we speak to our clients about. They own numerous companies within the pension sectors from, shall we say, buyouts over the recent years. And then finally, we own Sainsbury's, the retailer, 923 shares, £2,500, 2% of our portfolio. Everyone needs food, everyone needs to eat. It has struggled, shall we say, with the impending minimum wage increase. It has going to take a big hit from the NI contributions, but results were in at Christmas, very good trading statements, and it has been gaining market share. It is doing a price war with Aldi. So a collection of shares, shall we say, financial services, but all good quality companies. And hopefully during the month of February, the second half, we'll get some great results from the banking sectors, and we'll get some very nice dividends announced payable April and May. Remember, they're my own personal opinions. If you like the videos, smash the like button, subscribe to the channel. Now let's look at the funds we held within the portfolio. Now at the moment we own 9 funds, 5 in profit, 4 in loss. Makes up 54% of our portfolio. Total funds of £70,169. At the moment we're topping of a fund, probably a simple world index fund. So at the moment we own a passive adventures fund, £25,000, 90% of our portfolio. It was done, we just switched off, covers a lot of sectors, very low fees, done from our platform provider. We own a legal and general technology fund, owns about 250 shares, 0.3% of fees, great results, so we say, last few years from the big Magnificent Seven, £16,000, but 12% of our portfolio. We own a Fidelity World Index fund. We have been topping up, and we just put £200 in last month, 14.5 grand. Makes up 11% of the portfolio, but it owns around about 1,400 shares and a very low fees of 0.12%. And the average, shall we say, return last 5 years has been over 10%. Some funds that have struggled though is a China fund, 2.5 grand, 2% of our portfolio. Emerging markets, £1,400, 1%. A second emerging market at £300, 1%. We are hopefully going to see when they're back in profit, we're going to disinvest from them funds and put it into our simple tracker funds. 1, reduce fees, and 2, simplify the portfolio, but we're getting better results at a lot less cost. Now, one fund that has struggled is a Russia fund. We put £500 in, got to over £600 plus. It's struggled ever since the Ukraine-Russia conflict has happened, and it's now worth £229. Has, shall we say, recovered lately, but thankfully it makes up 0.18% of the portfolio. But it just goes to show what happens if, shall we say, you invested within a certain or specific country. Now we have ring-fenced some funds for a specific purpose. We wanted to keep it separate, but we wanted it on short-term, shall we say, access, but we didn't want to keep it in cash. We put £3,000 in, S&P 500 fund. It's done very well. It's now worth 3.7, but it's 3% of our portfolio. And we bought an FC All Share World Index fund. We put 5,000 in. It's now worth just over 6, and it makes up 4.7%. But when things settle down and we need the money, or we don't need the money, we may put that into existing holdings. But so with all, shall we say, long-term holds, apart from the China emerging market funds, they always say they're going to come back, but they don't seem to be. But they're making nice profits, but we're not going to sell at a loss. But we will simplify our funds within the next, shall we say, few months, if and when they recover. But it just goes to show, we've got a portfolio over 6 figures. We're only putting in £250 a month, but we're doing it on a regular basis. And all the dividends are reinvested within a tax-free wrapper, so use your allowances to your effect. It just goes to show, if I can build a portfolio, you can too. If you create a plan within a tax wrapper and invest on a regular basis. Get into the habit, shall we say. Remember, if you like the videos, smash the like button, subscribe to the channel, and we'll see you again in the next video.